Welcome. Today we're diving into two important insurance terms, replacement cost and actual cash value, often abbreviated as ACV. These concepts are crucial for anyone who owns insurance, whether it's for your home, car, or personal belongings. Understanding the difference between them can help you make smarter decisions when choosing or updating your policy. Throughout this video, we'll break down what each term means, how they affect your claims, and why knowing the distinction can save you money and stress in the long run. Let's start by understanding the basics of insurance coverage. Replacement cost is a term you'll often see in insurance policies. It refers to the amount it would take to replace or rebuild your property with materials of similar kind and quality without deducting for depreciation. In other words, if your insured item is damaged or destroyed, the insurance company will pay what it costs to buy a new one, not what your old one was worth at the time of loss. This is especially important for homeowners, as rebuilding costs can be much higher than the current value of an older home or item. Actual cash value, or ACV, is another common term in insurance. Unlike replacement cost, ACV takes depreciation into account. This means the insurance company will pay you the value of your item at the time it was damaged or lost, considering its age and condition. For example, if your 5-year-old television is stolen, you'll receive the amount it was worth after 5 years of use, not the price of a brand new TV. ACV policies often have lower premiums, but you may get less money when you file a claim. Depreciation is a key factor in understanding actual cash value. It's the decrease in value of an item over time due to wear and tear, age, or obsolescence. Insurance companies use depreciation to calculate how much your property was worth at the time of loss. For example, a laptop bought 3 years ago will be valued less than a new one, even if it's in good condition. This calculation directly impacts how much you receive from an ACV policy. Let's look at how replacement cost works in practice. Imagine your kitchen is damaged in a fire. With replacement cost coverage, your insurance will pay for new cabinets, appliances, and materials of similar quality, regardless of how old your previous kitchen was. This means you can restore your home to its previous state without worrying about out-of-pocket expenses for depreciation. It's a great option for those who want to fully recover after a loss. Now, let's see how actual cash value works. Suppose your 10-year-old roof is damaged in a storm. With ACV coverage, your insurance company will estimate the roof's current value, considering its age and condition, and pay you that amount. You'll need to cover the difference if you want to install a new roof. This can lead to higher out-of-pocket costs, especially for older homes or items. When comparing replacement cost and actual cash value, the main difference is how depreciation is handled. Replacement cost ignores depreciation and pays for new items, while ACV deducts for age and wear. This means replacement cost policies usually cost more but provide better coverage. ACV policies are cheaper but may leave you with less money to replace your belongings. It's important to weigh these factors when choosing your coverage. Understanding the difference between replacement cost and actual cash value matters because it affects how much you'll receive after a loss. If you want to fully restore your property, replacement cost is usually the better choice. If you're looking to save on premiums and are comfortable covering some costs yourself, ACV might be suitable. Knowing these options helps you avoid surprises when you need to file a claim. Both replacement cost and ACV are used in various types of property insurance. This includes homeowners insurance, renters insurance, and even auto insurance. Each type of policy may offer different options, so it's important to check your coverage details. Whether it's your house, car, or personal belongings, understanding these terms ensures you know what to expect if you ever need to make a claim. Let's use a homeowner's insurance example. If your home is damaged by a covered event, replacement cost coverage will pay to rebuild your house with similar materials, even if construction costs have increased. With ACV, you'll only get the current value of your home, which may not be enough to rebuild completely. This example highlights why many homeowners prefer replacement cost coverage. Renters insurance also uses these terms. If your belongings are stolen or damaged, replacement cost coverage will pay for new items, while ACV will pay the depreciated value. For example, if your 5-year-old couch is ruined, replacement cost pays for a new one, but ACV pays what your old couch was worth. This can make a big difference in how quickly you can replace your things. Auto insurance can also use replacement cost or ACV. If your car is totaled, replacement cost coverage will pay for a new car of similar make and model, while ACV pays what your car was worth before the accident. Since cars depreciate quickly, ACV payouts can be much lower than what you need to buy a new vehicle. This is why some drivers opt for replacement cost coverage if available. One of the main differences between replacement cost and ACV policies is the cost of premiums. Replacement cost policies usually have higher premiums because they offer more comprehensive coverage. ACV policies are more affordable, but may leave you with higher out-of-pocket expenses after a claim. It's important to balance your budget with your need for protection when choosing a policy. The claim process can differ depending on your coverage. With replacement cost, you may need to provide receipts or estimates to show the cost of replacing your items. With ACV, the insurer will assess the item's age and condition to determine the payout. Understanding these steps can help you prepare and ensure a smoother claims experience. Proper documentation is essential for both types of coverage. Keep records of your belongings, including photos, receipts, and serial numbers. This information helps your insurer determine the value of your items and speeds up the claims process. Being organized can make a big difference when you need to file a claim. Every insurance policy has limitations and exclusions. Some items may not be covered for replacement cost, or there may be limits on how much you can claim. It's important to read your policy carefully and ask your insurer about any restrictions. This way, you'll know exactly what's covered and avoid surprises later. Sometimes, you can add endorsements or riders to your policy for extra coverage. These additions can help cover high-value items or provide replacement cost coverage for specific belongings. Talk to your insurance agent about your options and see if adding a rider makes sense for your situation. Replacement cost is calculated based on the current price to replace an item with a new one of similar kind and quality. Insurers may use market prices, contractor estimates, or receipts to determine this amount. It's important to update your coverage regularly to reflect changes in prices or property value. Calculating actual cash value involves determining the replacement cost and then subtracting depreciation. Depreciation is based on the item's age, condition, and expected lifespan. This means older items will have a lower ACV, which can affect your payout after a claim. Understanding this process helps you estimate what you'll receive if you need to file a claim. Several factors influence depreciation, including the item's age, condition, and how quickly it becomes outdated. For example, electronics lose value faster than furniture. Insurers use these factors to estimate how much value has been lost over time, which directly impacts your ACV payout. Replacement cost coverage offers several advantages. It allows you to replace lost or damaged items with new ones, helps you recover faster after a loss, and provides peace of mind knowing you're fully protected. While premiums are higher, the benefits often outweigh the extra cost for many policyholders. However, replacement cost coverage isn't perfect. The main downside is the higher premium cost. Some policies may also require you to actually replace the item before receiving the full payout. It's important to weigh these factors when deciding if this coverage is right for you. Actual cash value coverage is more affordable and can be a good option for those on a budget. It's especially useful for older items that have already lost much of their value. Lower premiums make it accessible, but remember, payouts will be less if you need to replace your belongings. The main disadvantage of ACV coverage is the lower payout after a claim. Since depreciation is deducted, you may not receive enough to fully replace your items. This can lead to higher out-of-pocket costs and slower recovery after a loss. Consider these drawbacks when choosing your coverage. Replacement cost coverage is ideal for homeowners, renters, or car owners who want to fully restore their property after a loss. If you have newer items or want to avoid large out-of-pocket expenses, this coverage is a smart choice. It's also recommended for those who live in areas prone to disasters or high-value property. ACV coverage is a good fit for those with older items or who want to keep insurance costs low. If you're comfortable covering some replacement costs yourself, or if your belongings have already depreciated significantly, ACV may be the right choice. It's also suitable for people who don't need to replace items immediately. It's important to review your insurance policy regularly. Check whether you have replacement cost or ACV coverage, and make sure your coverage limits match your needs. Update your policy if you make major purchases or renovations. Staying informed helps you avoid gaps in coverage. Don't hesitate to talk to your insurance agent about your options. They can explain the differences between replacement cost and ACV, help you understand your policy, and suggest changes based on your needs. Open communication ensures you have the right coverage for your situation. Some items, like antiques, collectibles, or rare artwork, may not be eligible for replacement cost coverage. In these cases, insurers may only offer ACV or require a special appraisal. Make sure to discuss any unique or high-value items with your agent to ensure they're properly covered. Inflation can affect the cost of replacing your property. Make sure your replacement cost coverage keeps up with rising prices by updating your policy regularly. Some insurers offer inflation protection endorsements to automatically adjust your coverage as costs increase. A deductible is the amount you pay out of pocket before your insurance kicks in. Both replacement cost and ACV policies have deductibles, which can affect your claim payout. Choosing a higher deductible can lower your premium, but you'll pay more if you file a claim. If your policy only offers ACV, you may be able to add a replacement cost endorsement. This upgrade provides better coverage and ensures you can replace your items with new ones. Ask your insurer if this option is available and what it costs. Market value is different from replacement cost. Market value is what your property would sell for today, while replacement cost is what it would cost to rebuild or replace it. Insurance usually focuses on replacement cost, not market value, to ensure you can restore your property after a loss. Some insurers offer guaranteed replacement cost coverage, which pays to rebuild your property even if costs exceed your policy limit. This provides extra peace of mind, especially in areas where construction costs can rise unexpectedly. Ask your agent if this option is available. Extended replacement cost is another option that provides additional coverage above your policy limit, usually a percentage more. This helps cover unexpected increases in rebuilding costs. It's a valuable feature for those who want extra protection. Functional replacement cost coverage pays to replace damaged property with materials that are functionally equivalent, but not necessarily identical. This is often used for older homes or unique items where exact materials are no longer available. It helps keep costs reasonable while restoring usability. Let's summarize the key differences between replacement cost and actual cash value in a simple table. Replacement cost pays for new items, ignores depreciation, and has higher premiums. ACV pays the depreciated value, considers age and condition, and has lower premiums. Use this comparison to decide which is best for you. Imagine a house fire destroys your kitchen. With replacement cost, your insurer pays for new cabinets and appliances. With ACV, you receive the value of your old kitchen minus depreciation. This case study shows how coverage type affects your recovery and out-of-pocket costs. Suppose your 3-year-old laptop is stolen. Replacement cost coverage pays for a brand new laptop of similar quality. ACV pays what your old laptop was worth after 3 years of use. This example highlights the practical impact of each coverage type. After a car accident, replacement cost coverage pays for a new car of similar make and model. ACV pays what your car was worth before the accident, which can be much less due to depreciation. This case study shows why coverage choice matters for vehicle owners. Choosing between replacement cost and ACV depends on your budget, the age of your belongings, and how much risk you're willing to take. Consider your financial situation, the value of your property, and your comfort with potential out-of-pocket costs. There's no one-size-fits-all answer, so weigh your options carefully. Before choosing a policy, ask yourself, how old are my belongings? Can I afford higher premiums? Am I comfortable covering some replacement costs myself? What are my risks? These questions will help you decide which coverage is best for your situation. Insurance needs can change over time. Review your policy at least once a year or after major life events like buying a home or car. Make sure your coverage still fits your needs and update it as necessary. Staying proactive ensures you're always protected. To sum up, replacement cost and actual cash value are two important insurance terms that affect how much you'll receive after a loss. Replacement cost pays for new items, while ACV pays the depreciated value. Consider your needs, budget, and risk tolerance when choosing coverage. Understanding these terms helps you make informed decisions and avoid surprises. Thanks for watching. Understanding the difference between replacement cost and actual cash value can make a big difference when you need to file an insurance claim. Take time to review your policy, ask questions, and choose the coverage that best fits your needs. Being informed is the best way to protect yourself and your property.